Hey everyone, this is 100 Lot Trader bringing you my weekly market prep and last week sessions recap. The first thing I'm going to talk about is a trade update with NVIDIA. It turns out that I was wrong. Luckily, I realized this right before the open of the cash session on Friday and was able to contribute, in fact, to the buying spree that resulted in a nearly 5% move on NVIDIA in the single session. I'll show you what I realized, and there's proof of this. If you look at the posts on my channel, you'll see that before 9:30 a.m. Eastern on the previous Friday session, I posted a screenshot outlining what I'm about to show you and outlining what I was going to have to do. But this is what I realized. I had recalled, in fact, over the holidays, thinking about how I could have been wrong about this move. And the move that unfolded was, in fact, one of the scenarios that had dawned on me. But up until, really, I believe it was Thursday's session, my look for a double top with a sort of retracement into this sell side liquidity region where I had put my initial NVIDIA position on was seeming supported by the price action. I had to endure several different retracements against my position, which otherwise was actually very, very well placed. I had a quite favorable position on out the money 130 puts on the January contract. What I didn't realize, what I didn't see was this. This I anticipated occurring when we saw this downwards move, but what I didn't anticipate was a continued move upwards. This I thought would be a sell side liquidity run followed by a continuation. That's not what unfolded, however. What I realized basically first thing in the morning on Friday was that I had missed this giant order block that was sitting right here. And it's funny because this is perhaps one of the most literal visualizations of an order block that I've ever seen, but it is not an inner circle trader idiomatic order block. This right here is an idiomatic order block where you see an engulfing candle that breaks the open of a bearish candle. This is a bullish order block. What I didn't realize, largely because I'll admit it, I was greedy. I wanted all the NVIDIA that I could possibly get, and I saw this liquidity run that could have unfolded. What I didn't realize was that there was a big, large lot trader right here at 135 who said, no, I'm protecting, this is my position, and I'm protecting it. You're not getting down there. When I look back at it, I see, oh, yep, this is right at the equilibrium level, or it was. It's actually shifted up a little bit since the Friday session's run. But this order block kept rejecting the market. Rejection, rejection. This on the, I guess it was the Thursday, last day of December. This was redelivery. An order block filled, push the market up, and then I missed this. This was a lower or a higher low. This should have been my cue, along with this movement up, that I was about to get run out of the market. And in fact, in my analysis, the day before, I said that this was a very real possibility. And then on Friday's session, I realized that was exactly what was going to happen. Part of it was because NVIDIA was up, but another was because I realized that Tesla was about to jump significantly. So anyway, I pretty much dumped. I started selling puts and buying calls. I was short a call, a 135 call, and long 130 out the money puts. I really didn't take much of a hit on those puts because I had such a favorable entry on it, and I managed to just dump them on the open. That short 135 call, however, was a little bit painful, but in the end, I have been long NVIDIA since around 128, 129. So I was able to see more of a net gain on my position, even though I did realize a small loss on Friday. Right now, my NVIDIA position is just open convexity. This is the point where, you know, I understand options. I know how to hedge, but the worst thing I could do is get in the way of the moving train. I'm just going to let it run. We've got a clear buy-side target up here. We've got the CES keynote on Monday, 9:30 p.m. Eastern. So Tuesday's session should tell us, you know, whatever is going to be the aftermath of the NVIDIA keynote. Right now, I'm going to sit on it and see what happens. I'll show you what I saw in Tesla first thing in the morning, and you can, this isn't retrospective. I have a post of this before the market open on Friday. This is what I saw. You see how the wicks on these candles, this is at a 1 hour, they're going up linearly. You see, this is a subtle indication of the phenomenon of lifting the ask. I saw this right before the open on Friday, and I realized that the market was going to move, and that's what happened. Tesla went big, 8.2%. I followed the options market on this. There's some interesting things. On the January 3rd expiration, there were an absolutely stunning number of 400 0DTE 400 calls with dark prints all over them that expired in the money, like deep in the money. What I'm interpreting that as is, if you recall, I had outlined this short seller up here at 466, their long call hedge down here at 380, which is exactly where Tesla went to. This is where those long calls start hurting quite a lot. These in the money calls expiring, I'm reading this as short covering. This is closing part or all of this short position. What I think is happening here is what I suggested may be the case, is a reversal. We've got a leveraged in the money call position. We're closing out our short position. And I believe, realistically, it would be very unusual for Tesla to just keep going straight up from here. It's not impossible. But we do have areas that we would anticipate would be resistance up here, just in the form of that would be mitigation. You've got trapped buyers up there that would be breathing a sigh of relief to be able to get out of that position. And there should be, it's kind of a sizable number. So you might expect resistance up here. We could also just see a kind of drift back down into an accumulation of Tesla around this discount range at the 390 level that I targeted earlier last week. What was interesting is we did see a volatility expansion that was almost entirely Tesla. But what we saw on Friday was, in fact, a volatility crush. And right around the open, I closed out my VIX calls. I realized what was going to happen. I closed all my short deltas or my negative deltas and rode the market up. And again, if you look at the posts on my channel, you'll see that I saw this. I was ready, even though it went against what I had initially believed would occur. So this volatility crush seems to have been almost entirely associated with Tesla. This was a significant move. Interestingly enough, though, there's actually volatility still relatively elevated compared to what we had been getting accustomed to for the last several years. There is a lot of room for downwards movement in the VIX right now. So if that should continue, we should see some significant support in the market. Based on this structure, on Monday, it would not surprise me to see just a little bit of drift back, which would mean typically on Monday you'll see volatility spike a little bit. That would likely look like kind of a retracement in Tesla, probably a retracement in NVIDIA. Now that 140 has been broken, you can pretty reasonably anticipate that 140 should become a support level. There's options dynamics around this. There's trap sellers here. There's people who went short 140 calls looking for the retracement. But anyway, 140 was the major resistance for quite some time. Now it's pretty reasonable to anticipate some sort of retracement to this area, probable support continuation. When that happens, I don't know. We could see a big movement up. We could see kind of a shallow retracement down into this area starting Monday. But the big catalyst for NVIDIA is the keynote at the CES on Monday. Now this, I'll be honest, I spend a lot of time being cynical and looking for a trap. This could be, buy the rumor, sell the news sort of thing. We'll just have to see. I'm going to be watching NVIDIA very closely on Monday to see what it does. If it were to just keep going straight up, I would start favoring a buy the rumor, sell the news. If it started moving back down, it seems like a lot more probable of a bounce and breakout. We'll just have to see. I put a short leg on my QQQ position. I'm hoping I'm not going to regret that. This seems like a probable point of resistance. NVIDIA kind of moved to the top. Tesla, had a stellar run. Seeing some sort of retracement back seems very probable. You see this gap here. I mean, technically, this has been delivered quite a bit, but I also see this gap on the options market as well. So a retracement to kind of fill this up seems pretty reasonable to me. In either case, I do still see room for downside on the NASDAQ. So I mentioned previously on NASDAQ futures, we still have this sell side liquidity pool here, but given the state of the options or the volatility market, what seems more likely to me right now is maybe a little bit of retracement and then support as volatility pretty much gets crushed out of the market until maybe 15. It might just keep going straight down. The market could, the NASDAQ could just, go straight up from here, which would annoy me because then I'd have to close out another short and realize a small loss, which would just be annoying. But my QQQ position is like super profitable, and I have I think a lot of long-term room for growth here. So I don't plan on holding that short long, however the market goes, but I do favor at least some sort of movement downwards beginning Monday, just to kind of round out the significant volatility crush we saw on Friday. So there's some other things I'll mention. I spent most of 2024 long silver. I managed to get a long position. This was one of the better trades I've been able to do at the time. I went synthetic calls at around 24.80 on this bounce right here, and I was able to ride them up to 31. I traded some various hedges and made money both ways. Around this point in time, I closed out a short leg that I'd been holding for a long time, made some money on it, rode this final leg up, and then closed it just because I didn't like what I was seeing here. Around this time, it just didn't look like a favorable bullish structure. So I closed it and was still, in fact, holding puts that I doubled down on and rode down to about the 26 level where I closed them. Now, initially, I had been thinking about re-entering here. I'll actually show you the silver futures. It's a little bit cleaner than SLV, which is what I was showing you. So typically, where silver bounced is exactly where I would start buying silver again, hand over fist. But for whatever reason, I just found myself not wanting it. It was more gut than anything, but with the lack of interest rate cuts planned for 2025 and the potential, I mean, there is a very real potential that we might actually see interest rates go up. In that case, silver, small cap stocks, even gold, all of the precious metals and interest rate sensitive instruments, long-term treasuries as well, they all start not looking very interesting or very good at all in terms of, you've got Mag 7 that look like they'll probably grow. They're not, I don't anticipate the Mag 7 having much resistance when it comes to long-term interest rates. Anyway, what I saw, this is a bearish order block on the day chart. We retraced to the 50% equilibrium level, moved right up here. And so I went ahead on SLV. I just bought puts. I mean, to me, you've got a bunch of resistance up here. There's trap buyers, people who are underwater that would like to get out. You see a seller here, which may even be this big buying block. I mean, I bought here and got out. Well, I got out all over this, but I finally closed it up here. I think what I see down here is sell side liquidity, potentially a break of the overall ascending channel that silver has been in for the majority of 2024, and some downside movement. So I'm long in the money puts. I could do any number of things. I could potentially buy silver again down here. But were we to break down, and this might be a really good move. I mean, this looks like a sell side liquidity run. I think silver in the long term still looks appealing, but in the short term, I think interest is moving elsewhere because the interest rate cut narrative is frankly just not supported right now. So anyway, short silver. I'll mention RIVN. RIVN I have been watching recently pretty closely. I've managed to do some short trades with it, but I haven't committed any capital because RIVN has predominantly been in a descending structure. Even though, let's see if I can, even though there is a clear accumulation here, RIVN has only really recently been testing the top of this descending channel. So even though I had been seeing some interesting movement here, I had not been willing to commit any capital because I wanted to see, RIVN has tested the top of this several times and then been rejected, aggressively. But what we saw, I mean, I think this was all on Friday. Yeah, RIVN like rocketed up 25% on Friday. To the top of this shorter term ascending channel. And to me, that's a break of market structure. RIVN has broken this long-term descending channel, has had a strong weekly close above this level. And because of, I mean, if you look at RIVN, the market has been overwhelmingly short. I would like to go and look to see what the actual short interest on RIVN is, but the sellers have been in control of RIVN for 2 years at least. Regardless of what you think of RIVN as a company or electric vehicles as a whole, you should not underestimate the power of market mechanics and the fact that buyers are buyers, be they people who are actually buying the stock or they are people who are short the stock and now must buy it back to cover their positions. Because of this, I see RIVN as a short squeeze candidate, which means it has the potential to go parabolic, right? Like a move that doesn't even make any sense. Thousands of percent. I'm not going to prognosticate about that. Whoops. That's ugly. But if we look at this longer term channel and just take a measurement from here, I mean, up to about 40 Yeah, look at that. We got relative equal high. We've got liquidity parked right here. I hadn't even seen that before. That's relative equal highs, everybody. That's buy side liquidity right there, parked. So to me, a move up to 40 on RIVN based purely on short squeeze market mechanics is entirely plausible. So my plan is to go in the money calls on RIVN, longer dated, and see how it goes. I'm planning something similar on NIO. NIO is, well, I consider a lot of the electric vehicle companies to be roughly equivalent to meme stocks. I mean, they're not profitable. But they have the tendency to go parabolic because of short interest and the mechanics of the short squeeze. NIO is still in a descending structure. There's no reason to be bullish, quote unquote, but where it's sitting right now, I mean, it is showing a higher low, higher high, consolidation in a fair value gap of, the color on this might be wrong, forgive me. This looks like a bullish order block. You've got a fair value gap sitting right here. Let's see, does it hit the fit? And it's accumulating right along the 50% through the 25th percentile. This is, you know, this is heavy discount on NIO right now. So again, short squeeze mechanics, you're looking at where liquidity is. We've got buy side sitting right here, buy side sitting right here. I mean, a move to 10 is pretty easy to imagine, which is 100% increase. And with as volatile as NIO is, that's not even that significant of a move. A move to 15, I mean, you can see it. What I plan to do, probably out the money calls, relatively close in, maybe 30 to 90 days. We'll see. I'm not fundamentally bullish on NIO. Let me make that clear. I just trade what I see as opportunities. I see the shift in market structure here. I see the accumulation occurring and this fair value gap right along the range that you would expect. And I mean, the risk reward on this is stupid. NIO's options are pretty cheap. I mean, I'm looking, this is like a 10, 20 to 1, maybe 30 to 1. I rarely risk more than about 0.25% of my portfolio in out the money options, but this one is one of the more obvious ones that I could take. So I'm planning on looking for a position on this, assuming NIO hasn't exploded upwards and I've missed the move already on Monday. If it goes down, okay, whatever. I don't care. It's 0.25%. I'll take the chance for anywhere between 2 to 5, maybe more percent of my portfolio on a single speculative trade on the potential for a short squeeze. Is there anything else? I did buy out the money calls on Apple. This may have been impulsive, but I saw on Friday Apple is just like quietly underperforming everything else in the market. And I don't really see anything fundamentally bearish here. There's a nice big buy side liquidity block. You know, this is a rejection block, liquidity run here. I see sell side liquidity run out. All throughout this area. Oh, I've already got it highlighted. There's a inefficiency. This is a big obvious wick. And you know, I'm a believer in the contrarian trade. When NVIDIA is up 4.5%, when Tesla's up 8%, you know, the magician can be using misdirection to be picking up what no one is paying any attention to. And to be fair, Apple is sitting here right at the bottom, like pretty much the 20-day low at the bottom of this long-term ascending channel. It could go lower. I mean, you see this, but all I really see here, the relative equal lows here are a lot clearer on the daily chart. This is an aggressively expanding, high-end Mag 7 stock that met no resistance on the way down, ran out liquidity, stopped at an order block visible on the one-day chart at a significant discount. Yeah, I'm going to take out the money calls, 120 days out on this without really, as soon as I saw this, I just bought them. Maybe it goes straight down from here. Maybe I'm wrong. But, again, when I'm trading out the money calls, I'm looking at 10 to 1 plus reward to my risk. And as I said, so this is maybe a 0.25% risk. So I'll take trades like that all day long, as they help cover losses that I might incur on my core positions, which are currently NVDA and QQQ. So that is the update. I am not fundamentally bearish. I see a lot of basically just kind of consolidation and correction. The possibility remains, however, for this large volatility move. And I'll say this, it's very, very hard to predict when these types of events occur. What I can say is that the market is telling me that we have moved into a higher volatility regime where there is a bid on volatility, there's an interest. And this, honestly, this makes a lot of sense. I mean, we're moving into the second Donald Trump administration. There's a lot of uncertainty about, what will actually unfold here. So it's really not very surprising at all that we might see increased interest in hedging against volatility overall. Until the bottom of this ascending short-term channel gets broken, and we return to the kind of longer term volatility crush that we've seen for, the last few years. I still see this as an elevated volatility regime, which frankly is my favorite world to trade in. I love volatility, big moves in either direction. I hate, in fact, low volatility, boring, whatever periods of time. So I'm actually pretty excited about 2025. Uncertainty and volatility in markets are where I do my best. So we'll see how things go next week. Good luck out there. I hope you're making money. And if you're not, I hope you're at least managing your risk. I'll talk to you soon.